The stock market is going higher on an unconfirmed report about a future event that may or may not happen. This is a fantastic example of the insanity and delusions of today's markets. Buy the dip or you will fear missing out on becoming the next on the Forbes richest list. Meanwhile, global trade is slowing to levels we haven't seen since the financial crisis. But who cares, right? You came here for the truth, so let me unveil that for you. Today I'm going to show you several charts. I have a lot of information to get at. It's going to be one of those jam-packed episodes, so let's begin. You're looking at the markets right now as of this time. It's approximately 2 p.m. on this trading day, watching the Dow Jones going up 140 points. It's excellent. It's fantastic. It's amazing. Everything is good, right? Because of what has happened. No, not because of what has happened, but what might happen based on an unconfirmed report. That's right. The market loves those unconfirmed reports. We could see how the market has behaved over the last 5 days. This happens to be the S&P 500, but basically all markets are reacting like this, going up based on something that is fiction. You're looking at the S&P 500 versus the MSCI All Country World Index, excluding the US. Okay, now we're nominalizing this back at this point here of January 26, 2018, because that's when the market really fell apart. Here you can see the divergence in between the two. Obviously, you're looking at the red line, which is the S&P 500. However, the All Country World Index, excluding the US, has not performed very well since that period of time. Many people keep pointing to the success of the stock market, and obviously, since March of 2009, every stock market has moved upward. However, if you look at the peak of January 26, 2018, we are basically at that same level here and now. It's interesting because a long period of time has passed, and yet we are seeing this where the market has been moving up and down in this range. Of course, if you look at the All Country World Index here, not doing so good in comparison. Okay, the markets have still struggled. While they have come up since the low point at the end of December 2018, obviously we are still far behind in that regard. Now the US market's doing very well, primarily because of the FANG stocks. Everybody loves to chase the FANG stocks. That has been the name of the game. Well, we're looking at this right now, and you can see the global trade year over year has declined quite significantly in terms of percentage. We are now at the levels that we haven't seen since the financial crisis. This is the Advanced Economies Trade Direction Statistics, showing you basically these different lines at the bottom: exports to world, exports to EU, exports to advanced economies. They're all moving in the same general direction. Just wanted to show you the fact that it has been slowing dramatically, and if you look at the pace of that, it's worse than 2015, 2016, when we saw some huge problems going on within China that of course spread around. The US was suffering as well, but as soon as the central banks started to kick it into high gear, we saw the benefits of quantitative easing, at least for the different financial markets around. They were able to get boosted back up, but the economies still didn't see that benefit because of course quantitative easing doesn't benefit the economy. It only benefits the financial assets. It builds bubbles. That's really what it's designed to do anyway. This here just shows us the apparent weakness that if you're not paying attention, you're not going to get it. Now looking at the FANG stocks, I just wanted to show you the fact that we are at the same level that we were at peak previously. A similar fall had then led to the decline going back, all the way through December, and we'll see what happens this time around. I just wanted to show you this because the FANG stocks are often looked at as being the best stocks in the world to trade, to buy. These are the trillion-dollar companies. These are the ones that are the best of the best, and nothing bad could ever happen to them. Buy them regardless. There are basically no analysts out there that will tell you not to buy the majority of these stocks. However, they are still at the level we are looking at from basically a year ago, and they forget that because they're always pointing to the charts. Well, let's look at it at the very, very bottom here. Obviously, it's done so well, so therefore it's done really good, and that means it's going to do good in the future. The way that they really base their decisions are completely unwarranted in any level of realism, but this is what we have to deal with today. We get the Jim Cramers out there yelling and screaming about absolute nonsense. You have these analysts that are admittedly in so many cases paid off. Articles are being written by people accepting money to put these in their so-called newspapers, online or otherwise, and people suck it up. They take it down. Why? Because they're making money, quote unquote making money, even though they haven't realized any of those gains. Here they are. G4 central bank's balance sheet and global equities, my favorite, absolute favorite chart to look at, and this just gives us an idea here. We're looking at this back from all the way 2003 essentially to the present, and the MSCI All Country World Index, that's the black line, and that compares, of course, directly correlates to what we're seeing with the central bank balance sheets. This only gives us the big four: Fed, ECB, BOJ, and the BOE, and I just really like to look at as many as I possibly can to give myself a better idea, but this is a good start here. When we look at all of the countries, the PBOC, we're looking at all of them, BOJ, everybody all together, then of course I can say, well, they seem to be having this concerted effort, not just the big boys, but I want to see them all. That's okay, because if we see these, then it gives me a good sense of what the rest are doing anyway. The central banks around the world have printed trillions upon trillions of dollars, and of course we have seen the rise of these different stock markets as a result. Now, this doesn't come without consequences. Even the central bankers out there say that you cannot reduce interest rates down to zero and print money forever because you will create a hyperinflation. They don't deny that. If that was the case, if this wasn't the case, look, they would just bring interest rates down to zero, bring it down into the negative, and print quadrillions of dollars for everybody. That's what some people just seemingly do not understand. You cannot bring interest rates down without consequences. There's something called open market operations, and I see people that are just so foolish over and over and over again, making the same mistakes. Evolution of the Global Fund Manager Survey, most crowded trade right now, long US tech. That's right, the FANG stocks are everybody's favorite trade right now. My goodness, people, they keep on walking into the same issues over and over again. They look at Apple, they look at this or that, and they think to themselves, this is a trade I simply can't lose. I mean, Warren Buffett bought the stock, therefore it will never go down. Well, that's what we usually get at the end of a cycle. People do not look at what's actually happening fundamentally, and they are often burned. You can see the comparison between May and April. The darker blue line is May, and the lighter blue is April, just showing you the difference here. Shorting European equities has been reduced. Apparently everything's fine, even though Italy just said they do not care about the budget and they will exceed it if necessary, and they will have to, of course. Long US dollar, long emerging markets, and so on are all in here. What level in the S&P 500 do you think would cause the Fed to cut the Fed funds rate? And you're looking right now at the top, doesn't seem to be much change, 2350, but if you look at this, really 2500 has really increased, apparently, that they would have to bring this down. And obviously as the market moves up, that they would see the percentage wise and base it on that. I'm looking at the S&P 500. There's no reason why it can't cross over the 3,000 mark. We've had a lot of money that has been printed. We've had interest rates at historic low levels. Why not? Why couldn't it cross 3,000? But who really cares? Is that what this is about? That you're looking at the stock market and you're thinking to yourself, will it cross that 3,000 mark? We need to be worried about the average individual and their pension funds, their 401ks, and how this is all directly correlated, because in the next recession, everybody gets hurt. They are holding on to these things that they feel are never going to go down in value. I hear of the constant reports of people borrowing money to buy stocks. They're going to be burned, and let's just say that they should have been more wise. In the next year, what do you think is most likely to happen with the US 10-year Treasury yield? It will trade in a 2 to 3% range. That seems to be the number one. So we'll see how that all happens. How do you think the global real economy will develop over the next 12 months? This just shows us that they're not having much expectation. The fund manager survey gives us a good idea as to what's happening. I think it's $750 billion worth of money that is being traded by the individuals on this fund manager survey. So it is quite quite significant, and they're not seeing growth. Inflation expectations are picking up here. Net percentage expecting a higher global CPI. That, of course, could be an issue because of what we've seen in tariffs. It could be because of the money printing. There are any number of reasons, but this right here just gives us a little bit of an insight into what they are thinking, and then of course we'll see what happens. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a like on this video, you're supporting me, you're supporting this channel, and you are supporting the truth, so I really do appreciate that. Thank you. If you want the financial education that you were not taught in school, these two books have everything you need from top to bottom, A to Z. All the data is in the link in the description. If you want the audiobook version, you can get that at themoneygps.com. If you want to know about the 4.2 million cars that are sitting unsold in lots, you got to watch this video. Click on it and I will see you there.